Hello, trading is closed on October 29th, 2014, and I'm Jeffrey Tennant. I didn't really have a call yesterday. Often when I don't have a call, the market closes little change, and that's what happened today. I did have a wish list of what I would like to see. I said I would like to see a gap down at the open. That didn't happen. I had an optional, meaning not required, but often prints target of 1972.19 based on the mejt system. This low here missed by 3 cents, and the target was eventually hit. I also said I would like to see this low undercut. That required 1969.01. That one also missed by 3 cents as the low as 1969.04. It's close enough for me. It's optional and doesn't really have to print anyway. The significance is if we get under this level again, support won't be there. It was already tested once. We'll come back to today's action in just a minute. During the day, the software identified a gap up, which we'll discuss later. This doesn't appear to be a gap, but if you look at futures prices, which is what counts, it is. This looks like no gap, but it's an artifact because all of the SPX prices don't print at the same time. During the day, when the market was in free fall after the Fed announcement, the F's mean the system said the move was a false move. We hit the optional 1972.19 target from yesterday, found support under that level twice, and these white lines are support levels from previous mejt targets. The false move lower had a target of hitting this thick line, which we did, and we encountered resistance over the line. Unfortunately, we don't have any new mejt targets for tomorrow, and that kind of leaves me to my own devices. Well, this is not healthy action unless it's reversed promptly at the open. We have a gap up, a new high, and despite that, the market was unable to close over yesterday's close, the prior high, and couldn't even close under this low. Unless reversed promptly at the open, that's a very negative pattern and tends to lead to much lower prices. The Fed announcement was here. The initial move of the Fed announcement usually telegraphs how the market will move eventually, which is down. There's often a three-leg whipsaw. The first leg, then you have another leg which is greater in magnitude as measured from the point of the announcement than the first leg, which would target a price of over 1993 plus, and then a third leg which is the largest of all and continues the move. If we're going higher at all, it would be nice to see this 1993 price print by gapping up sharply, ideally over this high, and if not, gapping over it, taking it out soon after the open. If we don't do that, this upside target, I think, could fail to print at all. I was hoping to see this 1985.59 high hold. It didn't, but we have rallied to but not through this 1991.39 price. Difference of 1 cent means nothing to me, and if we can't beat that high, and if indeed we undercut today's low sharply, we could have a sharp Eve, which is a rounded top, Adam, which is a stilt move up and a stilt move down, Eve and Adam top. If you're positive about the market, you want today's high taken out quickly. If you're negative, going below today's low and closing below it and adding to that could give you exactly what you want. So the call for tomorrow is there's no mejt target. This is negative action unless reversed promptly at the open. Taking out the high gives the bulls some hope if it's accomplished early in the day. Taking out the low could lead to much lower prices very soon, and that's today's call.